If partying in five-star hotels or luxury yachts wasn't premium enough for the ultra-rich in Dubai, Five Hospitality are now offering a private jet for just $11,000 an hour. This is Fly5, a 16-passenger private jet complete with a dining table, shower, 55-inch TV, and even a master bedroom. The party plane, which is an ACG 220 jet, is a result of a conversation between Five Hospitality and Airbus, which was looking at a perception shake-up for private aviation at the time.
Because Airbus, this is their first private plane ever. So, they wanted to take out the sort of corporate image of private aviation.
Now, commercial airlines in general is a loss-making business. But there has been a lot of debate on whether private jets are a good investment due to high maintenance and operational costs and asset depreciation. But could owning a party jet to be chartered to relatively young UHNIs be a lucrative business arm for Five Hospitality?
We did our math at $11,000 an hour, which is profitable for us. I think we're at about $7,000 flying hour. That's our cost. So when we did 11,000 model, we were like 30-40%. But at the end of the day, we got overwhelming demand. In fact, someone called yesterday and they just want the plane for an hour and a half, and they're ready to pay $70,000. He's just proposing to his girlfriend. That just shows in the last 2 years where the demand has gone vis-a-vis the supply.
While Five fully owns the plane and charters it to its affluent guests, owning a private jet comes with its own tedious and expensive hassles. That's where Vista Global steps in. Headquartered in DIFC, the company provides worldwide business flight charter services. As most private aviation businesses, Vista too witnessed staggering growth during the pandemic. But 3 years on, what's driving the sector's continued growth?
As you know, the industry has seen some explosive growth through the COVID period, and that had catalyzed a lot of people to move into the industry that had not been before, but although they had access to it. So in 22, we've seen a 74% growth in our VistaJet program membership hours versus the year before. So to put that in context, that's about a 3x our pre-pandemic levels. There are kind of continued drivers in terms of people coming into the industry. So what we've seen is a lot of the people that used to fly, let's say, first class before, now they've migrated into flying private. Also with kind of the pullback in some of the direct flying with the commercial airliners, we see businesses that want to get to their kind of tier 2 cities, tier 3 cities where they have offices, they have businesses, and they cannot get access to it through the commercial airliners. They're coming and they're using our services to optimize the time of their executives and get access and go around.
Though Vista's offering of Boardroom in the sky for CEOs using their own fleet has proven to be successful, another service they offer, known as XO, is more like an Uber in the sky.
We've got the XO brand, which is the on-demand marketplace. And this is a product that's much more dynamic. Pricing on that offering is dynamic, so it goes in line with the market. So in season, it's usually a little bit higher. Off season, it's a little bit cheaper. But what we offer through that is we offer you access to our own fleet, but an alliance fleet of 2,400 vetted aircraft. But we utilize the availability of third-party operators to get lift.
Now, not everyone is as wealthy as Saudi's Prince Al Walid bin Talal to own a $500 million aircraft. But there's always the option of fractional ownership, where multiple people can split the cost and benefits of jet ownership. This could also help alleviate the key challenges the industry is facing today.
I think for the last couple of years, there's been a challenge in terms of pilots availability and access to pilots. Yeah, right. For the industry as a whole, fuel cost has been a bit of a concern or a challenge that you've got to manage. Your trip cost is not going to significantly increase because of the fuel cost. It's like 7 to 9% probably of your overall trip. When you compare that versus the benefit and the ease of deploying, whether it is your human capital, your executives to get to a certain region, business meetings, or for you to move around for certain business dealings, that cost is not significant enough to disrupt our business.
Be it owning your own private aircraft, leasing, jet cards, private jet charters, fractional ownership, or party jets, the future of this industry looks far from bleak, with some interesting trends set to disrupt the sector.
I would expect that we'll see a lot more consolidation as well, because historically it's been a fragmented industry. So we'll see consolidation in that space, M&As where businesses will consolidate, and you'll have a few bigger players in the industry rather than a lot of the smaller players that we see today.